Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. Today's date is October 30th, 2014. This is a Forex Technical Update. I'm going to take a look at three currencies in 5 minutes. Yes, just three, because I'm going to talk a little bit about the FOMC. I'm going to talk a little bit about the Reserve Bank of New Zealand. What did the FOMC do? They got rid of QE3, no more QE3. They also said that they got rid of the considerable time period and replaced it with, if incoming information indicates that faster progress toward the committee's employment inflation objectives than the committee now expects, then increases in the target range for the federal funds rate will likely occur sooner than currently anticipated. Now, on the other side of the fence, they said, conversely, if progress proves slower than expected, then increases in the target range are likely to occur later than currently anticipated. So they were on both sides of the fence there. The Federal Open Market Committee also acknowledged that the labor market had improved further, dropping reference to the significant underutilization of labor resources. Instead, they replaced it with underutilization of labor resources is gradually diminishing. So there was some give back there as far as the labor market from Ms. Yellen, it seems, and that was deemed more hawkish from the federal FOMC. Now, if we talk about the Reserve Bank of New Zealand, they also made their interest rate decision here today. And the key point of their decision was they dropped the reference to the idea that they would have to raise rates later down the road. And that, too, was, well, instead of being hawkish, it was being more dovish. And so the New Zealand dollar was a 1-2, one a little bit more hawkish from the U.S. side, and one a little more dovish from the New Zealand side. And they also, Reserve Bank of New Zealand also said, by the way, that the currency was significantly higher and they expected a significant drop in the value of the New Zealand versus U.S. dollar. So again, they referenced the currency, and that too is bearish. So let's start off by taking a look at the New Zealand versus U.S. dollar here, and I have it on the daily chart, and what I want to focus on here is this trend line. This trend line comes in at around the 178.16. You didn't hear that, but I had to sneeze. 178.16 level. That 178.16 level is now our resistance. Now, we did have a little correction that got a little bit above it here in the new trading day, but we're back down. Currently trading around the 178.80 level. So we're not going to want to see that price move back above that 178.16 level. Let's look at the hourly chart, and the hourly chart shows big progress to the downside here. We had corrected up. We were holding above the 200-hour moving average and fell below that, fell below the 200, fell below trend lines, fell below all these things. In fact, fell below the low price from last week's trading around the 177.93. We're not going to use that level. We're going to use the 16 level. I'm going to put this right up here at 16, and we're going to use that 16 level now as our resistance level. We want to stay below that 16 level. Put that on your chart, okay? Let's take a look at the euro versus U.S. dollar next, and I got the hourly chart up here. And for those people who got lucky selling right up here against the topside trend line, you had the benefit of not only having the market move a little bit to the downside and having some profit to invest through the FOMC, but you also had the benefit of the big move to the downside. Were you lucky? Anyway, the market moved sharply to the downside, and we in the process, we went below the 126.60 and 126.65 level. We can see that the 126.65 level is a level that was the low for the week before today, before the move to the downside here. So that's going to be a resistance level on the top side. We don't want to see the price move above. The 126.60 level, that goes back to the weekly chart. We take a look at the November 2012 low. That level came in at 126.60. So the 60 and 65 level, this area right here, that's going to be our line in the sand for overnight trading. We want to see the price stay below that level. And if it does, we have more bearishness to the downside. Look for further selling. We are making new lows here in the euro as we speak. Next target comes in at the 126.13 level, which is low from October 23rd. That was last week's trading. Below that level, we still have the October low, which comes in at the 125 level, 124.996, but 125. And as long, if we get below that level, then traders are going to start. Well, traders are already starting to think about the euro going down to 122.86. That's a slow right here, and maybe even getting down toward the 120 level, which is the low for 2012, 120.41 to be exact. Let's take a look at the sterling versus U.S. dollar. Oh, in the last few minutes, we've broken below the 160 level. Now, if we go to the weekly chart and take a look at the last 5 weeks, we've traded above and below the 160 level. which is a 50% retracement of the move up from the 2013 low to the 2014 high. That level comes in at 160, and we're back below that level. So now it's been 5 weeks in a row that we traded above and below that key level. Most of the time has been spent above the 126 level. Here's or 160 level. Here's one break. Here's another. This was about 3 days. We stayed below it. And the last time we went below this level, we stopped at 91. We're already below that level, currently trading at 79. So things are getting fast to the downside here in the sterling. We're making a break, and we want to stay now below the 160 level. That's a line in the sand. Really 160 to 160.18. The 18 level is a 200-week moving average. Stay below those levels. The bias remains to the downside. We're going to be looking for 159.50 level. Then we're going to be looking toward the 159.04 level. Then we're going to be looking for the 158.73 level. Is a low price for the 2014. We'll be looking for that low as well on the downside, as long as the bias remains in that direction. So there you have it. 3 currencies in 5 minutes, and a little talk about the Reserve Bank of New Zealand and the FOMC and what those implications are. My name is Greg McGlosky for ForexLive.com. Cowboy up, folks. Talk to you tomorrow. Bye-bye now.